So let's take a look at a term that is quite loosely used in the Forex market, and that is, what is price action? Well, if you're trading for any time at all, you will eventually come across this term, and it's not an easily defined term because there's no real set parameter as to what it would or would not be. Ultimately, price action is the movement of an asset over time, in this case a currency pair. In other words, if the market is rising, it's been bullish or positive, and if it's falling, it's been bearish or negative. You know, it can be compressed to something that simple. Luckily, charting platforms give you the ability to see quite clearly whether or not the market has been rising or falling. So as I zoom out, you can see that this market has been falling. Recently has been bullish. This is the Aussie yen, but this is going to be the same with any pair. And it gives you the ability to understand whether or not we are rising or falling over the longer term, or, you know, the shorter term if that's what you're trading. Now, you have to keep in mind that price action encompasses everything that happens. The price action is pretty much everything. You know, sometimes on this daily chart here, you can see that the market just goes back and forth. There is a consolidation trade there. Sometimes there are patterns that come out of it. You know, in this case, like a bearish pennant. There are bullish flags. There are a multitude of other types of shapes that people pay attention to. And typically what they're looking at is consolidation and then a continuation or a reversal, depending on the situation. And there are literally hundreds of those shapes that people trade. And it gives you an idea as to what's likely to happen. It gives you an idea of, for example, being able to read what the market is doing. You have the ability to place trades a little more strategically. So let's go back to perhaps this bearish pennant. You could make a serious argument that once we broke down through here, that we had broken through some from supportive action, resisting it going lower. So support had been broken and we had continued going forward. Well, if you pay attention to the price action, you can see that. You can also see that several of these candlesticks formed long wicks to the upside. So it shows you that every time they tried to rally, it really worked against them. Now, you can also make an argument for resistance being broken. So, for example, you could say that obviously the market is struggling to get above this area. You can see that we tried to get there several times, and eventually we did break above there and then came back to test it a couple of times. That's very common. It's something called market memory. That is price action. Price action shows a breakout, it shows a pullback, it shows a continuation back and forth. You should never trade against price action because, quite frankly, it doesn't matter what you think. You know, a lot of times you'll see things like, you know, people on forums saying, well, price has fallen too far. So you could have said that here. You know, look at how much it fell just over a handful of couple of days, but it got much cheaper. A lot of people would say, well, the Aussie is very cheap against the yen. It's at 70. You know, I find that to be extraordinarily cheap, so therefore I'm going to buy it. Well, it went another 1,000 pips against you before it finally rallied. You know, the market will move much quicker than you can anticipate and much further. There is no such thing as cheap or expensive, at least from a technical analysis standpoint. You can say so from a fundamental standpoint, but that's an entirely different process. And again, you need to understand when markets break support or resistance. So you look for areas where the market has struggled to either get above or below. And again, in this case, you can see that we had clearly had trouble getting above here, and then we broke higher, and it put up a nice little trade. Again, this was an area, this shape, that had offered a lot of support, and it offered a great trade. So make sure you learn all about that. You have to study price action. We have in our series of videos plenty of examples of this to help you become a successful technical trader. It involves shapes, trends, and even to a lesser extent, indicators. If you do not study and then pay attention to price action, you are doomed to fail. The market doesn't truly care what you think should happen. It will do what it does, and it will tell you what it wants to do over time. If you work with the market as opposed to against it, you obviously have a much better chance at success.